By 2026, a perfect storm in the financial markets could make millionaires out of people holding one of the world's oldest forms of money. Financial expert Andy Schectman is sounding the alarm. A huge, unfixable deficit in silver is about to collide with risks in our financial system that we've never seen before. He's convinced. We're on the verge of a great wealth transfer where the price of this critical metal held down for years is finally set loose. This isn't just about a price going up. It's about the very rules of the financial game being rewritten. In this video, we're breaking down exactly why Schectman thinks this rare event could turn everyday silver investors into the new wealthy class. We'll dig into the three pillars of his argument: a supply crisis that can't be solved, a global stampede out of the dollar and into real assets, and the ticking time bomb in the Western paper markets. This is the story of how a manipulated market is about to slam into reality, and you need to understand what's at stake before it does. The first and most important piece of Andy Schectman's thesis is something you can't fix with clever accounting or government promises: a deep and worsening shortage in the physical silver market. To put it simply, for years, the world has been using way more silver than it mines. This isn't a guess. It's a documented fact. According to groups like the Silver Institute, the market has been in a major deficit for several years now. Since 2021, the gap between what we use and what we dig out of the ground has become enormous. That's a stunning amount of silver that has simply vanished from global stockpiles to meet demand, and the trend isn't just continuing. It's getting faster. So why don't the miners just dig up more? Well, that's where it gets tricky. Unlike gold, about 70–75 of all silver is mined as a byproduct. It gets pulled from the earth along with metals like copper, lead, and zinc. This means that even if the price of silver tripled tomorrow, mining companies couldn't just flick a switch and produce more. They'd have to launch brand new, multi-billion-dollar mining projects, which can take a decade or more to get running. On top of that, global mine production has already hit a ceiling. After peaking around 2016, output has been basically flat. We just aren't finding major new silver deposits, and the costs and red tape to open new mines are only getting worse. So we're stuck in a situation where supply is, at best, stagnant. At the exact same time, demand is exploding, and this isn't just investors buying a few coins. This is relentless, non-negotiable industrial demand. Silver isn't just pretty. It's the most conductive and reflective metal on the planet, which makes it absolutely essential for modern tech. Two areas in particular are driving this insane consumption: green energy and electric vehicles. First, solar panels. The green energy transition is really just a massive silver-eating machine. Every single solar panel uses silver paste to move electricity. As the world races to build more solar farms, the demand for silver from this one industry has gone vertical. A solar panel maker won't stop production because silver gets a little more expensive. The metal is a tiny part of the cost, but the panel is useless without it. Second, the rise of electric vehicles. A regular gas car uses a tiny bit of silver. An EV, on the other hand, is a rolling supercomputer full of sensors and circuits. Most estimates say an EV uses around 20 to 30 grams of silver, sometimes more. Multiply that by the tens of millions of EVs expected to be sold every year by the end of the decade. The International Energy Agency predicts that by 2030, more than 1 in 3 cars sold will be electric. This is a gigantic new source of demand that barely existed 10 years ago. Schectman's point is this: supply is stuck in neutral, while demand is hitting the accelerator and is largely indifferent to price. That's the textbook definition of a structural deficit, and it's the foundation for a massive price revaluation. The second part of the 2026 thesis takes us from the mines and factories to the global stage. Schectman argues that we're watching the beginning of a worldwide rejection of the US dollar, and it's sparking a historic dash into tangible physical wealth. For decades, the world ran on a system where countries held US dollars and bonds as their savings. This gave the United States an exorbitant privilege, letting it print money to fund its spending, knowing everyone else had to take it. That party, he says, is coming to an end. The use of the dollar for financial sanctions, paired with America's own staggering debt, has pushed countries, especially in the East, to find an escape route. Nations like China, Russia, and India are systematically selling off their US debt, and what are they buying instead? Staggering amounts of physical gold. According to the World Gold Council, central banks have been on an unprecedented buying spree, shattering records for gold purchases in recent years. This isn't just a few countries. It's a coordinated global move. These are the biggest, smartest financial players in the world, and they're all making the same trade, out of paper promises and into real hard assets. Schectman is quick to point out that this is about national security, not speculation. They aren't buying gold because they think the price will pop next week. They're buying it because they've lost faith in the long-term health of the paper money system led by the dollar. So what does this have to do with silver? Everything. Silver has always been known as poor man's gold. As central banks drive the price of gold higher, silver becomes a screaming bargain. Historically, the price ratio between gold and silver has been much lower than it is today. As the world learns the value of hard money, that huge gap is unlikely to last. Schectman argues that as this de-dollarization trend picks up steam, it won't just be gold that's seen as a strategic asset. A country trying to secure its industrial future has to secure the one metal that makes modern technology possible: silver. The idea of nations starting to stockpile silver, just like they're stockpiling gold, right now isn't a crazy theory anymore. It's the next logical step in a world that is breaking apart and losing trust in paper promises. This would be a massive new buyer stepping into a market that's already desperately short of metal. If you're finding this breakdown of the global financial reset valuable and you want to stay ahead of these monumental shifts, do us a favor and hit that subscribe button and turn on notifications. It really helps the channel and makes sure you don't miss what's coming next. Now let's get to the final, most explosive piece of this puzzle. The third and final pillar of Andy Schectman's argument is where the first two forces, the physical shortage and the global hoarding, smash into the fragile, leveraged world of paper finance. This is the spark he believes will ignite the silver market, and the crash is set to happen on the COMEX, the futures exchange where the price of silver is supposedly set. To get this, you have to understand the difference between physical silver and paper silver. When you see the silver price on TV, you're not seeing the price of a real physical ounce, you're seeing the price of a paper promise to deliver silver later. The problem is, the financial system has created an enormous number of these paper claims, far more than there is actual silver to back them up. This has created a massive game of musical chairs. As long as everyone is happy just trading the paper, the music plays on. But what happens when too many people stand up and say, "I don't want the paper anymore, I want the actual metal"? The game stops, the system breaks. And that is exactly what has started to happen. For years, the inventories in the COMEX registered vaults, the silver that's actually available for delivery, have been draining at an alarming rate. We've seen periods where tens of millions of ounces were pulled out in a matter of weeks. For instance, there was one recent month where a shocking 38 million ounces were taken out. This isn't just small investors. This is big money and industrial users taking the physical metal and removing it from the system for good. The same trend is happening in the other major metal hubs in London and Shanghai. The physical metal is disappearing from the very warehouses that are supposed to back this giant paper market. As inventories shrink, the leverage in the system becomes more and more dangerous. Schectman warns that we are getting closer and closer to the day when the COMEX simply can't find the physical metal to deliver on a contract. That's the moment of truth. It's a force majeure event, a default. That's when the exchange is forced to admit the paper promises can't be honored and offers to pay people off in cash. The second that happens, the world will find out the price of silver was just an illusion. There will be two prices: the price of a worthless paper contract and the price of a real physical ounce of silver that you can hold, and the price of that physical ounce will have to explode to whatever level it takes to convince someone to actually sell it. That's real price discovery, and it will be chaotic. So how do these three powerful forces come together by 2026? Schectman sees a convergence of timelines where all this pressure builds to a breaking point. The storm is the combination of everything we've talked about. The endless supply deficits have emptied the shelves. The global move away from the dollar has brought huge price-insensitive buyers into the market, and the draining of the COMEX and London vaults has pushed the paper market to the edge of failure. The stage is set. All it needs is a spark. One potential spark that Schectman has pointed to is the possibility of future regulatory changes. There is talk of new rules that could make it easier for massive funds, like mutual funds and pensions, to hold physical gold and silver directly, if even a tiny fraction of the trillions of dollars managed by these giants tried to buy physical silver. It would be like trying to force a river through a garden hose. The current market could never handle that kind of demand, which would force an explosive repricing. This is the endgame Schectman describes. When the unstoppable force of physical demand meets the immovable object of a finite supply, the only thing that can give is the price. The price of physical silver would have to break away from the paper market and launch to a level that reflects its true scarcity. We aren't talking about a 10% gain. We're talking about a fundamental, once-in-a-generation revaluation. This brings us to the millionaire idea from the title. This is not a get-rich-quick scheme. It is the logical outcome of a historic wealth transfer. When a real asset that has been held down for decades is finally allowed to find its true value in a world drowning in devaluing paper money, the increase in its purchasing power can be life-changing. Those who understand this and accumulate physical silver before this happens are positioning themselves on the right side of that transfer. They are trading paper assets which are being created out of thin air for a real asset with unstoppable demand and a shrinking supply. In that kind of revaluation, it's entirely plausible that investors with even a modest position in physical silver could see the value of their holdings multiply, transforming their financial future. So, to recap Andy Schectman's stark warning, the silver market is on a collision course with reality. First, an unbreakable supply deficit. Industrial demand is exploding while mining supply is flat. Second, the world is losing faith in paper money. Central banks are leading a global charge back to hard assets like gold, and silver is the logical next step. And third, this relentless demand for real metal is emptying the vaults that back the paper-silver market, setting the stage for a default that will expose silver's true price. Schectman argues these forces are set to converge around 2026. The key takeaway isn't to panic, but to understand the deep risks in our financial system and realize the very nature of money is changing. This is a story about protecting your wealth in an age of currency destruction. The incredible potential for silver's price is simply a consequence of these much larger forces at play. What are your thoughts on this 2026 timeline? Do you think the paper market can hold on? Let us know your take in the comments below. Thanks for watching.